Hey everyone, trend lines are one of the most powerful tools in technical analysis. So watch the video till the end so that you know how to combine trend lines with support and resistance levels. But here is the thing, most traders are still using trend lines completely wrong. I get it because drawing them can be super confusing. Everyone seems to draw trend lines differently. So, in today's video, I'm going to break it all down. I will show you the right way to draw trend lines and how to actually trade using trend lines effectively. And I will reveal a high probability strategy that will make you consistent profits over and over. So, let's dive in. Let's break it down about what are trend lines. For that, let me take you to TradingView where we can study Nifty chart and we'll see how to draw trend lines. A trend line is basically a straight line that connects two or more swing points on a chart. Like over here, there is a one touch point, second touch point, third touch point, and this is a downward trending line. For example, so when you connect swing lows, the trend line moves upward, telling you the market is an uptrend. Like this one is an uptrend trend line. And when you connect swing highs and the line slopes downwards, that shows you we are in a downtrend, like this one. Now, you might wonder, can't we just see the trend without drawing a line? Sure, but trend lines do a lot more than just tell you the direction. They help you spot the trade setups that you would not have noticed otherwise. So let me show you what I mean. If price keeps bouncing off a trend line, every time it touches it, that's a clue. So like over here, one touch point, then Nifty came down. Again it bounced back, touched that downward trend line and then bounced back. So every time it touched this downward trend line, you got a trade to take in. So that's what I mean. Next time when it approaches that line, you have got a potentially new entry point. On the flip side, if price breaks a trend line, it could mean the trend is reversing, and that gives you a different kind of opportunity. Like over here, Nifty broke the downward trend line and it bounces towards the upward trend. But here is a catch. These setups only work when you draw trend lines properly. So let me walk you through exactly how to do that. So in next section, we will actually study about how to draw trend lines properly. So first we need to look for major swing points, those obvious highs and lows where price reverses. So like this, 1, 2, 3, 4. This is where the price reverses. To draw a trend line, just connect at least two major swing highs or swing lows. So over here, this is a platinum gold kind of a trend line because we have got one touch point, second touch point, third touch point. This is a premium one. And this upward trend one, this is not the platinum and gold. I would say it's a silver kind of a trend line because right now we have got only 1, 2, and 3 and 4 touch points. But basically the time duration is very less, even though we have got more than 2 touch points, but the time duration for this upward trend is way less than the downward trend. So now here is a question I get a lot. Should I draw the trend line using the wicks or the bodies of the candles? The answer is use whichever gives you the most touch points. And that's what I have done over here. You know, I have connected all the bodies through the uh, trend line, which gives me the maximum touch points. Also, think of trend lines as zones, not exact lines. So if your trend line is a little above or below the actual swing points, that's okay, as long as it's in the general area. So over here, I would consider this as a touch point, but as I said, you need to consider trend lines as a zone rather than a particular straight line. So in many times, maybe when the graph is showing us a trend, it might not touch our trend line in an exact point, but gives us a general idea that this is a zone we need to trade. So a bonus tip, I mark my downward trend lines in red and upward trend lines in blue. So as you can see, this is a red downward trend line and this is a blue upward trend line. So is this enough? Like drawing the trend lines and then taking the trades accordingly? No, absolutely not. So now let's combine trend lines, breakout, along with market structure shift to make a strategy which we can use to trade in the market. This strategy is a game changer. It helps you catch reversals after a trend line breakout, but only if you do it right. So here is how. First, find a trend line in an existing trend, say a downtrend like this one. So we have guessed the trend. We know that this is a downward trend. We have marked our touch points. Now, watch for the price to break the trend line, but don't just jump in yet. Before the breakout, check for weakening structure. If the downward trend has been making lower lows but suddenly starts making higher lows, that's a clue the trend is weakening. So over here we can see it has started to show us that the trend is weakening. So now if price breaks and closes well above the trend line, that confirms a trend reversal. So this is exactly where the trend reversal happened for Nifty. And that's when you enter your trade. But place your stop loss just under the trend line and again go for a 2:1 reward to risk trade. So always keep your risk management in mind, because given all the factors you have combined together, but still your trade can go into loss, and for that you should always be ready. And how you can be ready? With your stop losses. That will protect your capital. So this strategy will help you avoid those fake breakouts that trap so many traders. Okay, all right. So far, we have talked about using trend lines to find potential entries. But here is a pro tip that most beginners miss. Your trend line helps you get into the trade, but your support and resistance levels help you know when to get out. And that's where I always draw my support and resistance levels. So let me explain with an example how I do it. Let's say you are in an uptrend. You have drawn a trend line connecting the swing lows and price bounces off that line. You enter a long trade. Great. Like this. Over here, you would have got into the trade. But now you ask, where should I book my profit? If you just randomly pick a number or use a fixed target, you are leaving money on the table. Or worse, exiting too late and giving profits back. And that's why the resistance level is a must over here. So, yeah, this is where support and resistance levels come in. Look at the Nifty chart, and can you tell where it recently made swing highs? Over here. One, twice. So it has made twice, and this is the third time it has touched this point. So this is your resistance level. That's where prices have previously struggled. So when your trade is moving in profit and price approaches the resistance level, that's your cue to consider profit booking. Same logic is in a downtrend. You draw a trend line across the swing highs, price breaks it, and you go short. Now, let's look back at Nifty chart for previous support zones where price has bounced back before. And here you go. This is a level from where Nifty has bounced back. So this becomes your profit targets when you are shorting. So here is a simple rule to follow. Enter using trend line plus market confirmation. Exit near the major support and resistance zone. If you reach that level and price starts to slow down or form reversal patterns, take the profit. This one tweak alone can massively improve your risk to reward ratio and help you avoid overstaying in trades. And the best part, it is based on what the market is actually showing you, not just some random indicator value. So, my final thoughts, if you're still watching, you are clearly serious about leveling up your trading game, and I love that. I also post regular market updates and exclusive trade ideas in my channel. So if you have not already subscribed, please do subscribe. If you found this video helpful, give it a thumbs up, share it with your fellow traders, and don't forget to subscribe for more strategy focused content like this. And I'll catch you in the next one. Until then, happy trading.